I'm Alexandrian, Editor-in-Chief of Brand News, and this is the Financial Services News You Might Have Missed podcast. This is where I uncover news gems that may not have gotten their chance to sparkle, and I dust them off a little bit. I'm joined by my trusted co-host and my personal financial planner, Brandon Galisi of Galisi Financial. Brandon, how are you doing?
I am doing well. Excited we got some fun news to talk about today. And as we were talking about before, I passed my first exam of the enrolled agent or EA, so tax designation with the IRS. So one down, two more to go. So I'm just excited to continue to dive deeper into the tax side of things, which is incredibly valuable. From all the reports that we're seeing coming out in the industry, besides the known investments, it's typically tax planning and estate planning are pretty big things that a lot of consumers are wanting. So why not dive even deeper into tax?
Heck yeah, sign me right up. Anyway, our first piece of news this week is from Wealthtender, which is in the A to Z Communications Network. It's a digital marketing platform for financial advisors and wealth management firms. So in an age where not only search engine optimization or SEO is really important, but also AEO or answer engine optimization, basically the AI sister of that, Wealthtender has launched AI optimized FAQs. Lots of letters in there. This will make advisors' expertise more front and center as prospects are looking for a new advisor. I was thinking about this and actually today Googled myself as part of an exercise, which you should all do just regularly. It's good to know what people are saying about you and what comes up on that first page. It's interesting. So obviously we do this podcast once a week. I have another podcast that I do once a week. I write articles every now and then. I have press releases galore. My articles from like when I was a journalist circa 15 years ago are what are showing up on the first page. So you can tell what really matters to AI is that truthful, well-sourced, everything from the street and Forbes is up there. But I was wondering what you think of this and what kind of impact this might have.
I think this is huge. Like you were saying, SEO, incredibly important. But now in today's day and age, like I know for me at least, I don't go to Google near as much as I used to. Now, I still will occasionally, but I use Perplexity, which is one of my favorite AI tools because it also searches the internet and I can go and actually check out the sources without even having to use, a typical search engine. And so with more and more consumers, which I think it only has to be growing, I would expect from more people using AI as almost the go-to instead of search engine. I mean, if you're able to have some of your content show up on AI, like I have heard of advisors that have connected with clients because of AI quoted their blog posts and that's how they were discovered by that particular client. So again, I've only heard about that a few times now, but that's something also that I would expect to only continue to grow. So the fact that Wealthtender, I feel this is on the front end of this because we're starting to see maybe a few trickle in, but I would be very surprised if this doesn't just continue to grow.
Yeah, agreed. So does it make you think differently about your own marketing or how you do things? Because I'll be honest, it was kind of startling for me seeing like, how many podcast episodes have I done between the two? And like not a single one is on this front page. Like, what the heck?
I have no idea. The SEO to me seems somewhat like a black box. Like, of course, there's certain things that you can do to increase probability, get legitimate backlinks and whatnot. Again, you probably know way more about this than even I do. So it's going to be interesting how it does differ with basically the AI SEO. I wouldn't be exact. Yeah, but we're talking about search engine optimization specifically for AI. So I don't know how that exactly is going to work, but if there's opportunities to get more at bats, if you will, in front of AI tools where it's showing content, again, that doesn't guarantee anything, but that increases, as our good friend Carl Richards would say, increases your luck surface area if you're in more places than just search engine.
Carl Richards, we love you as always.
Absolutely.
And just FYI, if anyone is interested in all things Wealthtender, coincidentally, the CEO, Brian Thorpe, is going to be on my other podcast that I mentioned, Brand Stories, on Monday. So you'll get to hear more of his brilliance.
Yeah, I'm gonna have to tune into that one because I am definitely interested in this topic because, like I said, I'd be very surprised if we don't see this become a booming industry.
Absolutely. Well, thank you for tuning in. At least I can count on one.
Yeah. Absolutely.
So our second piece of news this week is about a partnership between JPMorgan Chase and Coinbase. So this will make purchasing crypto even easier. In the first part of this multi-phase partnership, there will be a direct bank-to-wallet connection, as well as the ability to use Chase Ultimate Rewards points that can be transferred into Coinbase. So this is the first time a major credit card rewards program can fund a crypto wallet. What do you think about all that?
I think there's two things. We'll go pro and con here. We'll go pro, makes it easier because if you can link some of your accounts from your US bank account to crypto to make it buying easier and transferring back and forth forth easier. I think that's where we're going to. I think a lot of other banks likely are going to start offering something like that, I would suspect. I think the biggest challenge was, one of the quotes was, for the first time, customers will have the ability to fund their Coinbase accounts using Chase credit cards. That's definitely the red flag that stood out to me. And insert any big bank, it doesn't just have to be Chase. Likely there are going to be a lot of fees associated with that. I mean, these days, if you use credit card for basically cash, like you're getting a cash advance, you're paying interest and fees from day one. So likely I would expect the same to be true. Again, maybe that's a poor assumption, but if nothing else, the idea of I'm going to buy crypto on my credit card, again, unless you're just using it, getting points and then paying that credit card off immediately, I could see some people end up basically buying crypto on debt effectively, and very high interest rate debt. You're paying 25% on a credit card for an investment, typically not going to be good financially. So accessibility is good, but we just got to be careful on how we're utilizing this.
Yeah. That's a fair point. When I saw this, so two things kind of popped into mind. Part of this maybe because I'm part of the SheFi season 14 cohort. So I'm learning about some of this crypto stuff more than I did before. So maybe I'm slightly more dangerous than I was before. But so it seems like this is sort of taking crypto, which was made with a specific purpose, and it was supposed to be very like debanked and private and whatnot, and then pushing it much further into the public, into what it's not supposed to be. So I guess you then wonder, are you a purist and you feel like, look, the whole point was that it was decentralized and it had nothing to do with regular banks? Or do you say, yeah, but everybody else should have access to it and not everybody understands crypto? And if somebody needs to take a class on crypto to understand it, maybe that's all the more reason. So that was one point that I had. And then the second, I'm sure that there's going to be an answer for this, and it just probably wasn't in this press release in particular. But let's say, for instance, that your Chase bank card either gets stolen or there's fraudulent activity or whatnot. So now that your bank is connected to your crypto wallet, can somebody get into your crypto wallet?
Ooh.
I presume there are going to be safeties put in there, because I don't think that I'm the smartest one in this room here, but I'm just saying the thought occurred to me.
Yeah, I mean, I don't have an answer either, but that's a very great question to be asking, because that would be a huge deal. I mean, even to your first point, I wasn't thinking about that either, Ali. You're right, because one of the big benefits of crypto is the deregulation, getting it away from big banks. So is this actually opposite of some of the big pros, if it's actually now going to be basically connected to the system? In addition to that, right, that could be huge. I mean, someone steals your credit card. Can they now access your crypto, and how would the bank deal with that? Like, they be like, we're taking the L on this one because it's our fault. But I mean, what if you lose your credit card? I don't know. I feel like this is a really good question to ask, because if someone can't answer that fully, that could be a huge issue, huge security issue. In addition to your first point about almost the philosophy of, are these two even congruent, big banks and crypto together? I don't have an answer to that either, but that's a good point.
Thank you. Coming from you, that means a lot, that I made good points and had good questions. I feel like I've like made it in the world somehow.
I feel like you typically have good questions and good points also, but that, I don't know, for what that one just jumped out. I was just like, yeah. Again, I don't have the answer, but that's a very good call out.
You know what though? But so with the new stablecoin regulation, I mean, that's also opening the door. So it feels like this is going to be the new normal, that banks and wealth management firms and whatnot, everybody's embracing crypto. And perhaps that is a good thing, and that there's more utility to it. It's more available to people. Mm-hmm. But yeah, it just seems like it's sort of taking away from the whole point of it.
Right. Right. But at the same time, it's like you still want probably some level of, I mean, like most things, anything to excess. Too much regulation on most things is bad. No regulation on certain things, also not good. So trying to find that balance, because people are like, oh, it's deregulated, we want it solely. I'm like, but that's how so much fraud can happen, because there's going to be bad actors out there. So yeah, I think it's going to be interesting how these banks weave the compliance aspect and the fraud with maybe still somehow more flexibility, slightly more deregulated, but also regulated enough where, again, to the question that you asked, can someone steal all my crypto if this happens? Because at that point, like, I'm pretty sure people would want that secure, would want some level of regulation with that, you know?
Well, then unless if you are fortunate enough that you bank with multiple banks and whatnot, it just seems like, so if you are the person who has one bank and your one bank is connected to your one crypto wallet, then somebody could suck you out in 1 second, versus I have like 5 different banks and I have a few wallets and everything's spread everywhere, which also, I don't know then how you manage your financial life, but if you do, God bless you.
Right. And then too, yeah, you mentioned the word utility as well. It's like, because right now I still think it's, at least from my humble perspective, and other people can have different ones and that's okay. But it seems like right now with some of the fluctuation in crypto, like I at least personally don't know of anyone like physically using crypto on an ongoing basis. Investing in it, absolutely. Holding it typically for the longer term, for sure. But someone who's like, I just went to the grocery store and I paid in crypto today. I at least personally, I'm sure people have done that, but I haven't talked to anyone who's physically done that yet. And again, I think part of it is because there still is a good amount of fluctuation on a daily basis with crypto. It's like, yes, I understand all the currency, it fluctuates to some degree, but it's negligible. It's almost not noticeable on a day-to-day basis, at least if you're just spent, like, it's not like one day milk at the grocery store is $2 and then all of a sudden for no other reason it's $5. That just doesn't happen. Whereas theoretically, your one crypto of whatever it is, you could buy 1 gallon of milk, but then all of a sudden on your way to the store, you could either buy 3 gallons of milk or you could buy no gallons of milk. That's a slight hyperbolic, but that's where I see the utility still isn't fully there yet on a normal spending basis. Maybe if someone had crypto and then they want to go and buy a Tesla because it's appreciated in value and they accept it, I could see that. But those are big purchases, and you would know exactly what your balance is before you go to the dealership in that use case versus grocery store.
So you're trying to say that you don't regularly use your crypto to buy a Tesla?
I don't. That's not a common occurrence for me.
I was sensing based on the language, but I wasn't totally sure. I'm glad that we confirmed that.
That was a fair assumption.
Thank you. And is it sad? So this shows how geriatric millennial I was when you were like, I don't know anybody who uses crypto at the grocery store. I was going to be like, call us. And it's like, you're on a podcast. Nobody can call you. They need to email you. God, I'm freaking old. Anyway, our third piece of news comes from Fidelity Investments through its 2025 Retirement Healthcare Cost Estimate Report. So apparently today, if a 65-year-old were to retire, their healthcare costs in their retirement would be estimated to be about $172,500, which is more than a 4% increase from the last year. One of two interesting points that I found in the report were that 20% haven't considered their retirement healthcare costs or needs, and 17% haven't done anything to plan for their retirement healthcare expenses. In both cases, I mean, obviously, geriatric millennial, so I'm not at that point that I'm actively really thinking about retirement, but I can't really fathom that personally. So I was curious what you think about that.
Yeah, I wasn't very surprised that healthcare costs keep going up. In fact, that it was only, I put that in quotes, 4% is that kind of not the worst thing, at least year over year. It could easily be higher. What I found most interesting in the article, they talked a lot about health savings accounts, which are, I think, one of the most overlooked accounts out there for folks that have a high deductible health plan. You get a pre-tax deduction like a traditional IRA. The money goes in and it can grow tax-free because you are able to invest it. And then in the future, when you take it out for medical expenses, and we're pretty sure even if you're healthy, nothing else, you're going to have Medicare premiums in the future. So we know you're going to have healthcare costs. I don't think anyone's probably disagreeing with that. And then you can use that in the future for those qualified medical expenses, also all tax-free. So the stat though that came out with HSAs is it said that, or Fidelity said, only 3 out of 10 are actually investing their health savings account money. And I think a lot of that is an education issue. And I think Fidelity even touched on that in the article. So even for folks that are familiar with the HSA, most people, like clearly about 7 out of 10, I would say, based on this research, are swiping their HSA debit card when they go for their regular checkups or for, we'll call it right now type medical expenses. And I think a lot of people simply don't know that they are able to invest it. And typically, at least from my experience, depending on who the HSA custodian is, somewhere around when your account balance hits $1,000, typically it's above that. Again, each one can be a little bit different. That's when you can start investing it for the future. And I think a lot of people don't yet know that, but this is one of my favorite accounts in general, but also huge to help with these healthcare costs. Or another, I would say even lesser known, is that you can actually use at least a portion of your HSA in the future to cover qualified long-term care insurance premiums, or at least a portion. Now, there's all sorts of rules and stipulations behind that I won't go into and bore everyone with right now, but that is at least a use case for using an HSA to cover maybe some health expenses in retirement, but also maybe help combat the cost of long-term care if someone needs that.
Sure. Very good point. And then ultimately, how or when should you be investing?
It's a triple tax advantage, pre-tax deduction going in. The money will grow tax-free if you do invest it. And then when you take money out for qualified healthcare expenses, and that could be in this year, it could be in 30 years. The biggest stipulation to even be able to contribute to one would be having a high deductible health plan. You can just Google or use AI to figure out what those limits are for whether you're single versus married. I think it's like 4,300 single, 8,300 or 8,600, somewhere around there if you're on a family plan. And unless you have a lot of known expenses in the present that you know you need to pull money from, if you don't have anything in particular, I would encourage you, like what my wife and I do is, and I can't even remember the custodian we have for her HSA through her employer, but once the balance gets above that $1,000-ish number, it automatically invests the rest in the allocations that we've chosen. So for most people, I would say set it up. And then what would happen if, say, we did spend some of that HSA money, it goes down, well then until it gets back up to that $1,000 again, that's when it's going to then reinvest anything extra. So you can kind of almost have like a rules-based system in there to say invest once it's over 1,000. So that's typically what I'd recommend for most people, unless you very much know, hey, I'm putting $5,000 into this account this year, and I'm going to have to take $5,000 back out for healthcare expenses this year. Then don't invest it. But if you don't have plans, whatever the minimum amount is before you can invest, that's what I would recommend.
Got it. Okay. Thank you for that. I appreciate it.
Yeah.
And you're right. It seems like an avenue. Very few people are really talking about it, but I appreciate you explaining, and hopefully somebody will take advantage as a result.
Yeah, absolutely. Yeah. Just check to see, just even ask your HR, hey, do I have access to a health savings account? Would be a great first question.
Thank you. So our last story of the week is from FICO. It's 2025 Consumer Survey, Fraud, Identity, and Digital Banking U.S. report. Said that up to 1/3 of Americans lie on credit card applications and think it's acceptable or normal. So I didn't realize that this kind of loan had a term, but apparently, according to FICO, they're called liar loans, which by itself just makes you feel like, ooh, I took like a liar loan? That's so horrible. I'm just saying. But could further stretch people's finances. Brandon, I think it was really interesting. We were starting to get into it before the podcast, but if you could explain why, I mean, obviously moral, everything understood that lying is just not really good. Why would somebody not want to do this to themselves potentially?
Yeah. So of course, in addition to some of the moral issues at play here for these liar loans, I like at least the alliteration that they've got going on. Oftentimes there's a reason that someone is going to get denied credit or they're going to get denied a loan because something in that person's finances leads the creditor or the bank, the lender, to not want to give them money, or at least at a certain interest rate. And the opposite of if we're lending with very minimal limits, I think we can all remember what happened in 2007 and 2008. People were getting home loans with very minimal income that probably didn't take a rocket scientist to figure out this person with this salary is probably not going to afford their mortgage payment in 2 years or even in a year. So in that case, actually, they hurt those people. Those people should never have gotten a loan. Now, you could say, oh, that person also had some level of responsibility to understand that. And some of the responsibility could be on them, but it was also a lot on the banks and the lenders. So I think same thing here, where they might be protecting some consumers from themselves, where maybe they can't get access to this new credit card. But if they did get access to it, again, assuming the truthful numbers, they wouldn't be able to pay it back anyways. And that could cause more havoc in their financial life. So I don't think this is just about lenders are bad, big banks are bad, they don't want to lend money. No, they want to lend money because they make a lot of money lending, but they want to do so responsibly. And if way too many people lying, granted, I think the banks will probably start to catch on to this and figure out new processes, hopefully. But if they didn't, and you have all sorts of people that are now starting to default on a lot of these loans, that's not good. I'm not an economist, but that would not be good if a bunch of people are defaulting on a lot of different loans or needing to declare bankruptcy. Maybe this extra credit card payment that you lied to get approved for is causing you now to not be able to pay your mortgage or your car payment. Now you don't have a house. Now you don't have a car. Like all sorts of bad things can happen. And it's not just lenders are mean.
Yeah.
But what are some things that jumped out to you on the liar loans?
Well, first of all, I didn't realize that there was a name for this. Like you said, I feel like that's going to have I don't know which way it goes, the L on your forehead, which just feels horrible for lots of reasons. But I think it's interesting how, so even we were talking about tax forms, people will, I just sort of like fudge the numbers a little bit. There's like no harm, no foul. The big government taxes me way too much, so like that's okay. Or same thing, like big banks, they're big banks, and like what difference is, whatever it is going to make to them. So like it's okay, I can do it. I think that there's too much excusing in these situations. So I think that we need to work on that. But I appreciate the fact that you were explaining what ultimately this could do to a person. But so for those who might be kind of like backed into a corner, whether it's, you just lost a job, whatever it was that just happened to you, what are there any other avenues for you to explore?
Yeah, potentially. I mean, of course, each situation's going to be different, but depends on what other assets someone might have. If they were to have any brokerage accounts, which means the only tax that they might have to pay if they have any investments in those would be some level of capital gains if they have made money in the account. So I'm a big fan of brokerage accounts. For that reason, it's not supposed to be your emergency fund, but it's much more liquid than most retirement accounts. So that would be obviously a great way to start. If someone had an emergency fund, this obviously would be a case to start using your emergency fund first, but we're going to assume probably a lot of folks in this situation probably have exhausted their emergency funds. So then there you start looking at your balance sheet and figuring out, okay, what else do I own? You had mentioned a cash value life insurance policy. I'm not the biggest fan of those. They have to be very specific, meet a very unique need. I think they get oversold, but the overall policies aren't always bad. But if someone does have some level of cash value, maybe it could make sense to tap into that potentially. The only other one or actually a 401k loan, that could potentially work. So, I mean, if someone has the back against the wall in this example, likely are going to get a lower interest rate on a 401k loan. Now, the stipulations would be your employer has to allow for that. And you would have to have at least enough of a balance because you can either take up to $50,000 or 50% of your balance, whichever is less. And then you pay yourself back into the account. So that could be an option. And then the final one that comes to mind would be any Roth accounts that you might have. You'd be able to not touch the earnings, but if you at least touch your principal, you put in 5, it's grown to 10. If you take out just the $5,000, you've already been taxed on that money. Therefore, when you take the principal, your contributions out, you don't pay tax on it. Again, we're starting to get into some strategies that would not be choice numero uno. But if, again, we're backed against the wall, we're trying to avoid a bankruptcy or really bad situations, there are some places to tap into if people have some of these accounts available to them.
So I appreciate you giving that kind of information because I can imagine, so people who find themselves in these kind of situations, that it literally, you do feel like you're up against a wall, but in all honesty, there are avenues that you have. And whether it's because you don't have a financial advisor or there wasn't the financial literacy to know, oh yes, of course I can tap into my 401k, all these other things. I appreciate the fact that you're putting that out there. Obviously, like you said, people should make the best decision for themselves. And if you can work with a financial advisor specifically to help you and make sure that you're doing the right thing for yourself, that would be great. But just good to know that overall there are better options than lying on a credit card application.
Right. Because again, the lying could actually hurt you worse, not even just because of the lying aspect, but because you're not going to be able to afford that credit anyways. I mean, even on this podcast, we've shared so many financial wellness programs and other resources that are coming out. So I mean, who knows, that could be one. If your employer offers a wellness program, something like that, this would be a great person to talk to, reach out to try to research to get some guidance, because it could be a really scary situation. And if you're in it, just there's a lot of emotions going on and it could feel really scary. So very deep empathy for that. So if you could even outsource a little bit, find someone you trust, even if that's not a typical financial advisor client, if you could even just let someone know your situation. Like I know, at least for me, I'm always happy to at least chat with someone, even if they don't become a client, or I don't even say, hey, you should join my membership. I would always be glad to, at least at this stage, take 15 to 30 minutes to at least point them in the right direction where they know, hey, this person clearly wants what's best for me. They know at least a little bit about my situation and are recommending some other resources. So if you can even ask your friends, your family, like who else do you know that I could just even talk to for 15 minutes, I think could maybe alleviate a lot of that stress for folks.
Yeah. So because I feel like we're ending on such a downer, I'm going to bring back the call Brandon, because this is what people do with fake phone. I don't know what this is.
Yeah, no, I still do this too.
Really?
Have you seen? Have you seen? I think there's a video that is asking either Gen Z or Gen Alpha, pretend like you're on a phone call, and they don't do this. I can't remember what they did, but I do this as well. And for those that are listening and not watching the video version, we're doing what I thought was the universal hand signal. You got your pinky and you got your thumb. You hold it up to your ear like you're on the phone, right? We got to paint the word picture for folks, Allie. But
I appreciate that.
But yeah, I can't remember what Gen Z and Gen Alpha did. They did not do. I did the same thing that you did. Yeah. I don't know what I forget the next generation what they do, but it's not that. And I found that very peculiar. because they didn't grow up with really handheld phones that maybe even had a cord. So
I know, right? Cords. Oof.
I know, what is a cord?
Well, that makes me wonder how you get the fake version of do you hold your hand up like
I'm gonna
you
after
never
this
know.
podcast, I'm gonna find the video and I'll send it to you. Now
Thank you.
I'm curious as to what it was.
I appreciate that. But anyway, thank you as always. I appreciate the fact that you are so willing to share your vital information with people and that they can hopefully help their own situations. So thank you for always being generous like that.
Yeah, absolutely. Always happy to be a resource for folks in any way that I can. So this is always fun.
Thank you.